And welcome back to the Traders Expo in Las Vegas. I'm Mark Sebastian, the founder of OptionPit.com, and I'm joined by my good friend Carolyn Boroden, the Fibonacci Queen. And, we just got done discussing what Fibonacci's are and how we can use them. Now, let's talk about kind of what you're seeing right now and how it relates to history. We're filming this, for those viewing later, in November of 2018, and markets are clearly moving around.
Oh, yeah.
So tell me about what you're seeing now, and have you seen this before?
Yeah, actually, the last time that we had the really healthy decline in February, one of the things that I noticed was that the decline in the December S&P contract was 344 points, or actually was it 344 and 3/4 points, and then the most recent decline was very similar at 344. So it's actually almost the same swing, and from there, that's where we started to see at least a nice little rally. So I'm going to consider that a key and pivotal low, and if we continue to hold above there, then it may look okay.
Okay, so when you're starting to kind of set your setups, is there, if I'm using these Fibonacci's, is the way to use them to go all in at once, or is it step a little bit in, and then once you get a little more confirmation, put more in? How is somebody that goes through the Fibonacci Queen method integrate this into their day trading or their swing trading?
Well, I would say with initial setups, like when we actually looked at that low, we also had some of the Fibonacci time cycles show up at the same time. When you have time and price come together, that's some of the best setups. So that's a time to go in, for a decent stake, or at least maybe 50% of a position. But then you can always add, because if this low is more important, the potential is extremely healthy. But what we have to do actually is take it from one decision to the next. So we had this beautiful rally from that symmetrical low, and then we traded up into, I guess, the next grouping of time cycles, and just slightly beyond the 618 retracement. That was where you had to tighten up stops and say, if it can't get beyond here, I need to protect myself. So at this point, you'd be out of that setup. But I am going to look at it again in the next few trading days as we pull back to that last low. And as long as we start to see new buy signals, I'm good for looking at it again, because the upside potential is actually to the 1272 extension of that huge 344 point swing. Multiply that by 1272, and that's your potential if we can hold above it.
So would you say that you use Fibonacci's not only to kind of guide what you're doing forward, but because you're able to see back historically, you know which ones are powerful and which ones are less powerful, and that really allows you to make stronger decisions versus just dipping my toe in the water?
Yeah, and when you combine it with timing, that's really special, because there aren't that many people that actually work on the time axis of the market. They'll say that they're timing the market, but they're using price data to time the market. I actually use the timing and measure the times between key highs to highs and lows to lows and project forward, and that gives you another dimension to work with. It's very helpful.
Well, that's fascinating. If people want to find you, where do they go?
FibonacciQueen.com. Or my Twitter, I'm Fibonacci Queen on Twitter.
All right, and thank you for joining us, Carolyn. And
thanks for having me.
Thank you for joining us on Facebook.